Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview here, this time with recruiter.com. And I'm excited to do this one because the first time that I met Evan, um, let me just say that I don't run across as many people that have the amount of conviction that Evan and excitement and enthusiasm that Evan had when I first met him. I mean, there was just no doubt in this man's mind that this is going to be a successful company, right? And I don't think that that's changed, even though things may look troublesome for the stock. It is not a reflection of the company. I don't believe I believe it's a reflection of the entire microcap space. And we'll talk about that in a second. But Evan, I want to thank you for coming on and sharing your story and telling us a little bit about recruiter.com.
Hey Tim, thank you so much. And yeah, you mentioned that to me the other day, and I couldn't agree more. I think there are two sides to every public company. There's the business and then the business of the business. I am so excited about our business. We've been growing. When I first got started as a strategic advisor about 3 years ago, a little over 3 years ago, company was doing about $2 million in revenue. We ended 19 at like probably $5-something million in revenue. We ended 20 at around $8 million, $9 million in revenue. We ended 21 at $20 million in revenue, and we're tracking this year for 30 million. Which is exactly what we said we were going to do. At the beginning of 21, we said by the end of the year, we're going to be at $20 million in revenue, scalable revenue, and an eye towards profitability. And our focus in 22 really is, growth with profitability, not growth at the expense of profitability. Really growth with profitability. We didn't foresee this recession coming, but my background really is in running startups. So I take money very seriously. I take being the steward of capital extremely seriously. And we're on a great trajectory. As a business, we're helping companies of all sizes deal with this challenge that the whole world is facing regarding talent. Finding talent is hard. Finding talent, if you're a small company, is a full-time job. And we're helping people do that through a very innovative platform that consists of a freelance marketplace. We run a marketplace for freelance recruiters. We have the world's largest network of freelance recruiters, and we place them on assignments, just like Uber does. And then we also have our own proprietary AI software that helps those recruiters do their jobs better. Our clients range from Zoom, ADP, Moody's, Unilever. We work with advertising agencies, law firms, accounting firms, startup companies, tech companies. I think we ended Q1 with about over 640 customers in Q1 of this year. So just fantastic. Everything from companies self-serving on our platform, leveraging our software, and white glove companies, generating over $100,000 a month in revenue.
So Evan, what really drew you to this story? I mean, what was it that drew you in personally to join and recruit?
Yeah, so I would say I'm a platform guy. I love expert networks. So in the sector of an expert network means there's a group of people and they're experts in whatever field that they're in, and we're going to leverage this network to do something specific. When I first saw recruiter.com, I told its owners, anyone that owns recruiter.com that's not worth $1 billion, someone is not executing properly. When I first got to recruiter.com, the recruiters actually were the audience. Recruiter.com was an online media company selling advertising to companies looking to get in front of recruiters. So our clients included LinkedIn, Indeed, Reuters, selling their stuff to recruiters. When I got involved, I said, gee, the recruiters shouldn't be the audience. They should be the product, tongue in cheek, right? They're the experts. And how do we capitalize on this overall network? I think the other thing that I really saw was this incredible brand. I've sat on the investor side of the table a number of times. And when you think about how much money gets spent by companies, for every dollar, the percentage spent on brand identity and lead generation and cost of customer acquisition, all those things. If you watch Shark Tank, that's the first question Kevin O'Leary asks: what's your customer acquisition cost? How much money you spend on generating customers, et cetera. And I've seen numbers where, oh, we're going to raise $10 million and 30% of it is going to go to marketing and brand identity. We have that already. Every customer that we have, one of our largest customers that's scaling up now visited our website, a couple of months ago, right? We generate so much free organic traffic because of our brand. We run 4 of the 10 largest LinkedIn groups. What that means is our LinkedIn group for recruiters and HR professionals has almost 900,000 people in it. So when we take something to this audience, that's 900,000 people in that audience. We have 50,000 Twitter followers. We have 100,000 followers just on LinkedIn alone. We have a newsletter, all these things. We have this incredibly large audience to generate our leads and marketing from. And we just ran a webinar 2 weeks ago with Deal, one of the companies we've signed this great partnership with. Over 200 people registering for the webinar. Just incredible to watch the power of this brand. And that was incredibly attractive. I think the second thing is I love reinventing existing industries. My last company was a company called Point, P-O-I-N-T, and we built a smart payment terminal. We didn't invent payment terminals. We didn't invent the need to take credit card processing. We were reinventing it. And there's something there's something, and I've done both. I've been in new markets. That being in a new market, I was in instant messaging security, early 2000s. I was in mobile computing in the 90s. When you're in new industries, it's very, very expensive and very time consuming. When you're in an existing industry and you're reinventing it, you're actually shifting the dollars over to you. We didn't convince Moody's to spend money on talent acquisition. We just convinced them to spend it with us. And there's something much easier to do that. It's part of why we've been able to scale so quickly.
Okay.
Long-winded answer for you, Tim, but that's my answer.
So I don't know if anybody else has noticed, but I mean, if you can't sense Evan's enthusiasm, I don't know, you're missing something, because I can tell, I mean, it's probably not been the easiest road, because I think you've had a lot of accomplishments that aren't being rewarded by the street, right?
Yeah.
And
yeah.
I don't think that is as I said at the beginning of this, I don't think that's a function of the company. I think it's a function of the overall market climate for the microcap space. Would you?
Yeah, I would agree. So look, I'm on CNBC once a month. I don't know any other microcap company of our size or our small size that has the exposure that we have. This backdrop is there like once a month on CNBC. Or the last month I filmed it in Boston. Fox Business News, Yahoo Finance, regularly talking about the overall job market. We really struck on something early on about 2 years ago. We did this recruiter index. It's a playbook I did over at Symantec. It's a monthly recurring data element that we can actually monetize and market. And we use that for broadcast purposes. We're on different on podcasts, et cetera. I agree with you, Tim. I think that, where the best advice I got early on was run a good business and everything else will catch up to it. I feel bad that our shareholders, certainly the ones that came in earlier, have not yet been rewarded. But I expect to get there. Fact of the matter is, put my money where my mouth is. The insiders, myself, the COO and the CFO, probably purchased over $75,000 worth of stock since we filed our last 10Q. We really believe in the business. We believe that we're an incredibly we have an incredible opportunity, and we're incredibly low priced. The other thing that we actually makes me feel good at the end of the day here is and this is fully disclosed. We did this at around our earnings call. We were approached by 2 well-funded private companies exploring possible acquisition of the business. And to see this through fruition, we actually engaged a company called Bowen Advisors. They're a boutique sell-side M&A firm out of Boston, and they're running a process now. So we made that very clear. We made it very public that we're doing that. The reality is that there's so much going on in the talent space now that for us to see the full potential of our platform and delivering recruiters and recruiting technology to the world, and we're doing projects really around the world, perhaps we belong in a bigger platform than in a micro cap company. And we engaged Bowen to really see that through.
Right.
I know that asks different questions. Gee, you're trading at $1. Would they do a premium? You know, the reality is that insiders own about 14% of the company. Management owns about 14% of the company now. So no one's going to want to do a transaction that devalues the price. No one's going to want to do that. And we certainly know that. And these things are usually done at a significant multiple of the stock price of where it is today. But I agree, you know, we're seeing people sell for a variety of reasons. You know, as Warren Buffett would say, you know, there are many reasons to sell a stock. There's only one reason to buy it. You know, that's the reality, right?
Yeah. And so, I mean, just to be clear, whether one of these deals gets done or not, I mean, if it's not the right deal, you're not gonna do the deal. But on its own merit and the growth that you've shown, right, and the ability to execute and do what you said you were going to do through a pandemic, right?
Pretty cool, right?
Yeah, I mean, that's pretty cool.
So, you know, look, you're with me, right? You're going like, Evan, where's the disconnect? I think the biggest disconnect really, Tim, is that, you know, I am not like most CEOs. I think you said at the beginning, and Recruiter.com is not like most micro cap companies. We're not waiting to see if we come out of clinical trials, you know, and we cure cancer. We're not waiting to see whether our mine strikes gold or whether we can actually, you know, generate more Bitcoin off of our processing. We're running a real business. We've got real software, real AI software. We have a great team in place. We're delivering results every day for our clients. Our clients are coming back. Our clients are calling us first. And our clients are scaling, and we're getting new clients every day. We're doing really, really interesting things on a regular basis, and we're helping, you know, real serious companies with their most precious asset, which is their people. So there clearly is a disconnect. I think, you know, to be tongue in cheek, I think part of the problem is that this space is so marred with sort of promises and commitments and all these other things that there's just such skepticism on the side of investors, certainly in the microcap space. You know, I developed this expression right before our 10Q call, which was, if I don't tell people I'm wearing pants, they'll assume I'm not wearing pants, right? And I know it's funny, but like, if I don't actually say, hey, I am wearing pants, the assumption is I'm not wearing pants. And, you know, the more that we say we're going to do something and we do it, you know, the more credibility that we're generating there. We're still very, very thinly traded. We have about 14.8 million shares outstanding, about 9.9 in the float. Like I said, 14% of are owned by insiders. I think of institutions own about 13%, 12, 13%, something like that. Not a lot of short positions. I think last time I checked, it was like 150,000 shares shorted, maybe a little bit more now. Just not a lot there. So it doesn't take a lot, you know, for the stock to move. And clearly it's moved down, you know, since this is like the worst graph you're showing me now for a Monday morning. But thanks, Tim, for making me feel bad. But, you know, again, I look at this and I go, wow, well, look at the opportunity we have on the upside. Our business has only improved. You know, when you see PayPal take a dive and Zoom take a dive, their business hasn't changed in 2 years, right? It's the same business that they were running 2 years ago. There's just either less of a desire, less of mojo. There's some reason that those stocks have actually fallen. We are actually a phenomenally different company than we were 2 years ago. 2 years ago, we had $0 in software revenue. Now we're doing like $400,000 a month in software revenue. Our on-demand business, which is
recurring revenue, right? That's
absolutely recurring revenue. Recurring revenue. It's just amazing. The company that we are today bears almost no resemblance to where we were, you know, 2 years ago from a revenue perspective and a revenue mix perspective and a focus perspective, et cetera. And yet, you know, the stock hasn't really caught up to where that is. But like I said, I think this is a special situation, if we're going to call it a special situation. And I am incredibly excited. You know, I've met some really incredible people over the last like few weeks who say, okay, I get it now. this is an incredible value. This is an incredible opportunity. As Rob Barron said last week, this is, the investing over the next 2 years will define the next 20 from an investor's perspective. And companies, look at what we're at now. We're at $1 now. I think this is an incredible investment opportunity for anybody, myself included. I put my money where my mouth is, right?
Right. And I actually, one of the things I loved about you, and this was, I think, and I am a shareholder, by the way, and I bought it, I think I want to say it was close to $4. And but I never go all in. I always start out small, and then I watch to see if I can be impressed with somebody. That doesn't mean that they're going to execute, right? And so I get in and I watch, and do they do what they say they're going to do? And you have done. I mean, you had this persona about you that was like, look, I'm gonna get this done with or with whether you follow or not, it doesn't matter. I'm getting this done. And I loved that enthusiasm. However, I did feel as though the overall market was on a 14-year bull market, and at some point that was unsustainable, right? And when you get the overall market selling off, doesn't matter what the companies are doing, 90% of the companies are going to follow what the market's doing. And the microcap space has been getting pounded for 14 months. But at what point, you look at the companies that executed through a pandemic, through all these challenges, have grown their companies. And like you said, this company it doesn't look anything like what it was when you took over, right? And it's all positive. This is good stuff.
Except for the stock.
Right. But the fact that you point out that it does have a very small float, and yes, it doesn't take much to drive the stock price down, but then again, it doesn't take a whole heck of a lot to drive the stock price higher either when people start to get it, right? And the thinly traded makes it challenging, but that can change literally in a day, right? One news announcement and that changes in a day. All of a sudden you get some massive volume. So, I look at this is a very interesting level because of the $1, right? A lot of people have a psychological attachment to round numbers. If it breaks below $1 and stays below $1, where can it go? The problem with this is that there is no historical data from a technical standpoint, right? So right now, the technical guys have been having just a field, just a lot of fun because there is no prior support, right? At some point, though, it gets overdone, and I think this is severely overdone. This is my opinion. I'm not telling anybody to buy the stock. That's not what I do. I'm not a financial advisor, but I would say this. What is your risk reward in this trade at this current level, right? I mean, they're growing revenue. You are in the process of exploring strategic alternatives, which is publicly announced. You do have exposure, much more exposure than any microcap I follow. I mean, you are literally on CNBC every freaking month. I see you on there every month, right? And it's like, okay, who else gets that kind of exposure on CNBC in the microcap space?
I agree. The good news, Tim, is that most people, other than our shareholders and the people that follow us, the very few, think we're much, much larger. Everybody thinks we're a much, much larger company. So like we have not been we have not been impacted at all from a client perspective. Really, no one looks at it that way, the way we do. Really. I get more congratulations. Oh, text me. Oh, you sounded good on CNBC. Nice shirt, good haircut. No one like, hey, dude, what's up with your stock price? Like no one does that except for like the few people who watch it. Again, I am really, really confident that, we will have our day. And more importantly, we're going to have our day either by getting there on our own, by continuing to execute and eventually the market will catch up, or, through some sort of strategic, acquisition where we're acquired, through one of the things that Bowen is working on. And again, I watch anyone selling today and I feel bad that they're selling stock today. I feel bad because I assume they're doing it because either we have not communicated properly on why they shouldn't, or they need the cash, they have a margin call, they have no choice. And that's what I'm being told is moreover. We had someone who died who owned 300,000 shares. Like there's always a story behind everything. But yeah, at this price, it really is an incredible opportunity. And again, I started this before. This is why, the three, CEO, COO, and CFO just bought over 75,000 shares, open market shares, et cetera.
So, if you look at it though, CNBC now, it seems like everybody that comes on there now is almost unanimous that we're going into a recession, right? That a recession is coming. And that's when you have that kind of story being told, the retail investor starts to get very nervous, right? There's a lot of uncertainty out there. And it's hard to have conviction in anything when you think there's a recession coming, right? Not that there's been a recession in place in the microcap space already for the last 4 or 5 months, right? In my mind, that has been happening already. We were in a recession for the microcap and small cap space.
Since January.
Right. So my view is, or my thinking is, that the market is a leading indicator. So if we've already been in that, I would say we're closer to turning around in that sector than many people would think.
You're better at that than I am, right? So I would probably not disagree with you, conversely agree with you, or hope and pray. I would say that, why is there so much conversation now about the labor market? And the labor market is still incredibly strong in this country. I made a call about 4 months ago on CNBC, where I said that the companies are stocking up on employees. We actually thought they were overhiring. And what you're seeing now in these layoffs are really overhiring, right? I overhired, therefore I'm laying off. Now those are layoffs, of course, because people are losing their jobs, but they're not the same layoffs of 2008. This is, I stocked up on too many employees, and I actually made that call a couple months ago on CNBC. I got a call from him the other day, like, I can't believe you were right. And we have the data that really shows it. The point is that, we are not returning to, assuming the labor market doesn't crater, right? Let's make that assumption. And no one thinks the labor market's going to crater. If you add up all the layoffs that you've read about, you've seen a layoff of maybe 60,000 people getting laid off in tech companies. It's not the tech people, it's the tech companies laying people off. There are 4.1 million people that quit in April, right? So there are just tremendous numbers of people moving around. The job mobility has never been stronger. And you're going to see people still moving around. There was another article, UK in England, a report came out this morning that said 25% of the people are planning to move jobs this year. Again, this is another article that came out. Price Waterhouse did a survey about a month ago. People are still moving around. As long as people are moving around, you're going to need support in talent acquisition. And what we actually believe is that we're going to see a bigger spike in our on-demand services, because companies that need to hire don't want to actually hire full-time recruiters to do this. They want to hire gig recruiters, if you will, that they pay by the hour, not on success, but by the hour, but not full-time on their own payroll. This way they could scale it up and scale it down. And that really bodes very, very well for what we're doing. So, we sign these. The other thing that we're seeing is these, work from anywhere is really becoming hire from anywhere. Let's talk about the nuance there. So work from anywhere said that Tim could be anywhere in the US and do his job. Tim's an entrepreneur, does his own thing. He could work anywhere he wants. Hire from anywhere basically says, hey, you know what? Tim has people that work for him that used to be near his office, but he doesn't care. If he doesn't care where he works, why does he care where the people that he hires works? And so you're really seeing happen are companies say, you know what? I can't find the people I want to find here, or I want to save money on the people I want to hire. Let me go someplace else and hire them. And let me go to Latin America. Why do I need a back office in New York or in San Francisco or in Chicago? Let me go build my back office in Argentina. Now, your first question is, setting up an office in Argentina, I got to get a lawyer. I don't know anything. Well, there are companies now that do that. And these companies, for the most part, didn't exist 3 years ago. So companies like Oyster and
I was
Deal
just going to bring up,
others,
so Oyster is somebody that you just had an announcement with
yeah,
recently.
a big announcement. Yeah, with their CEO. So we're now a strategic partner of theirs. We're doing joint selling. We're working on a couple of proposals with them now. Really cool stuff. Oyster operates inside of over 150 countries. So that means if Tim wants to set up an office in Argentina, he could do it all through Oyster. You want to set up a small office in Argentina, they will handle all the paperwork, all the legal intricacies of setting up an office in Argentina, payrolling and all that other stuff. You just have to find the people and they'll handle all the paperwork for you. Kind of what Paychex and ADP did in the US. You know, it used to be a big pain in the ass if you actually had employees in 4 states. I got a file in 4 states and SUI and all the other FUTA and all that. And Paychex and Paychex and ADP invented that space and said, don't you pay me, I'll take care of everything for you. And now there are other players in that space, JustWorks and PayCycle and others. Well, they've now, Oyster, Deal, and others have really built this for the global marketplace. So they will let Tim find great talent or hire great talent outside the US or wherever you want. In the US works for companies outside the US. That's really what they're doing. They don't find the talent, right? So they'll basically handle the talent and they'll pay them and orchestrate the payroll for it, but they
That's
don't
where you
find
come
them.
in.
That's where we come in. So we find them, they pay them. We find them, they pay them. So 2 weeks ago, we did a big webinar with Deal. We're now doing some joint selling now with Oyster. We're really ramping that up nicely. I am, I never use the word super excited because I think I come from a world where excited was enough, but I am super excited about the opportunity there to really grow this out. We're doing some really interesting things with them, and I expect to start seeing those results really in Q3.
Okay, so let's talk about, you've had the revenue growth and you mentioned now that you want to get to, cash flow positive, right? And that is your focus right now, right? How is
cash flow positive by Q4? Yeah.
Okay, so how is the company positioned? I know that in this environment, everybody's concerned about, especially with microcap, the need to maybe in a rising interest rate environment, have to raise capital, be dilutive to shareholders, right?
Yeah.
That's a big concern. Is that anything that you feel as though shareholders would have to be worried about in Recruiter?
Yeah. So, if you were going to say, Evan, what was the big mistake you guys made, and whether we can't control the market, we certainly can't control the world. I think when we delivered our 10K results back in March, we were a little bit cagey in terms of our cash plan. And I'll take it on the chin there. I'm a startup guy. I've been involved in startups my whole life. I know how to squeeze juice out of rocks. And so for me, walking around with cash in the bank and $5.5 million in receivables with companies like ADP and Moody's is like, duh, of course I'm good. I'm in good shape. Right. And again, if I didn't tell you I was wearing pants, you assumed I wasn't wearing pants. So we established a great relationship with Heritage Bank and Bayview Funding. So we now have a credit line in place, leveraged up against our accounts receivables. Our accounts receivables are very strong with fantastic companies. We had one incident back in Q4 of last year of a write-off that we had to do from a client that we had acquired. I think that was a little bit of a headwind to us. But we made it, very, very clear that we have no desire to sell capital at these price levels. And we're committed to not doing it. It's a little, it's obviously at this price, there's no opportunity to do it. That would make any sense for anybody. And we don't need to do it in order to achieve our goals, our cash flow positive, our profitability goals. So we made that, very, very clear. I think what it does inhibit us is doing some enhanced growth, right? So, there are opportunities today for other strategic acquisitions on the buy side that we're passing up on because we're just we don't have the capital to do it, nor do we have, nor do we want to, dip into our cash to do it as well. We did 5 acquisitions in 21. 3 of them were 100% capital, just 100% stock, and 2 were, basically a combination of cash, stock, and note, et cetera. And so those have been incredibly accretive, very positive for the overall business. And we're sort of missing on that opportunity now. I think there's a lot of companies that are scared of the recession. They're not prepared for it. They're not growing the way we're growing. They don't have their eyes on, the cash flow or the profitability side that we actually have. We know how to get there. If we would do anything, it would really be, to do some more acquisitions. But again, there's really nothing on the imminent horizon there. Our focus now is, our focus now is to hit cash flow positive EBITDA, positive adjusted EBITDA, positive cash flows, and see this Bowen thing to fruition, one way or the other. Fruition means yes or no, through really the next quarter.
All right. So one of the things that stuck out to me last time we spoke is, and the reason why you're so confident, one of the reasons why you're so confident, and I love this, was your team, the people that you have that are working together on your team. Right? That's
amazing. Really, just I'm a data junkie, so I see everything that comes through. I get a ding basically on my phone every time a customer sales made. I live in some of our CRM systems, and it is incredible to watch the quality of the people that they're hiring, the quality of our management team. It's just, top notch, really an A-class team. Could not be happier, could not be prouder of the team that we have in place. I just wrote an email over the weekend to the team. I do not worry about revenue. Our revenue growth is, we're doing great, great client management, great client support. We put our clients first. We were trying to do a management call this morning at like 10 o'clock. And they're like, hey, we have a client call at 10. All right, we'll move the call. Like, don't move your client call. We'll move the management call, right? And that's the philosophy of the company, right? Client comes first, and let's worry about everything else second. Like, we could always squeeze our own meeting in, like, that's fine. Just a great team. Each one in their own right are just absolutely a fantastic team. Really, I cannot be happier with it.
And I love that, right? I mean, to me, this isn't the Evan show. This is the recruiter.com team show, right? I mean, it's not just you. I mean, you're helping, right? You're keeping everybody on point, but you've got a team that you are extremely excited about, and that's why you're putting where your mouth is. It's not just you.
That's right. That's right. We did a prospect call on Friday of a company that I happened to, they found the company on their own, my team, but I happen to know the CEO, and I was on this call, and they basically slacked me, like, right at the beginning, I said something in the beginning, and they basically slacked, Evan, enough. And like, they took it over from me, and like, it was beautiful. And I love that, when you have people, because, look, I'm a very assertive individual, type A, assertive, but open-minded. I love it when they slap me. I love it when they basically say, hey, we got this covered, and they're doing great. It's amazing. It really is just amazing. I wish our shareholders would see the day-to-day of the successes that we're having with our clients on a regular basis. I wish they would, not just to improve the stock price, so they would have, 1/10 of the confidence in what we're doing that I actually have, and I'm glad you picked that up. But like, we're doing such good work, we just are, and clients are sitting there struggling. It is a struggle, Tim, to find talent today. It's a struggle. It's a struggle for everybody. And the old model of either doing it yourself through LinkedIn or a job board like ZipRecruiter, doing it yourself, or hiring a headhunter and paying a headhunter 30% of a fee doesn't work anymore. It just doesn't work anymore. And I'll tell you something, this client, thanks for reminding me, this client we were on the call, I think they're signing, by the way. So the client they were on the call with, they signed already. So that's good. The client that we were on the phone with on Friday basically said, so you're our partner in this? And I said, there you go. Like, there's no me, you, like, we're here to help you grow your business. And what CEO doesn't want to hear that they have a partner? We're your partner. We're not there because if we shove the candidate down your throat, we get an extra 30%. And I'll wait till that candidate's up, and then I'll go pull them and send them someplace else. Like, that's not what we do. We're helping these guys grow their businesses. We're coming up with an offering specifically for startup companies who are trying to build, development teams outside the US. We're actually going to prepackage the whole thing up. It's going to be really, really cool. Fixed price. We'll build you a team outside the US. You want a small team, a medium team, a large team, fixed price, done. 2 months, 4 months, 3 months, or 4 months, depending what you want. This is going to just revolutionize and reinvent the way that companies find and retain talent.
And you guys are at the front. See, what do I love? I love disruptors. I do. I love disruptors. I love companies that are challenging the status quo. And you guys are absolutely doing that. You have incredible enthusiasm. And I think you're positioned well. Yes, it's been a tough market. However, if we go into a recession, and you brought that up, do you see a full-blown recession? You have to see, there's still a whole bunch of businesses out there that can't find employees, right? So in my head, I'm thinking to see a full-blown recession, you have to see that the employment market collapse. And I don't know that we're going to see that, right? I still think there are so many jobs out there right now. And you make the point that if 4 million people feel like they can quit their job, they must feel as though there's plenty of opportunity out there.
That's right. And there are more articles now on how to keep your existing employees, how to retain them, how to incent them not to leave. Job mobility has never been better. By the way, I gave a talk last October on the job hopper economy, the emergence of the job hopper economy, and we're changing that to job mobility, right? The job mobility has never been better, right? You could go from job to job without a problem. And by the way, think about a recession. If my mortgage goes up by $1,000 or gas is now costing me an extra $100, every 2 weeks, how do I go find an extra $1,000 a month? I'll just go get a job that gives me an extra $1,000. I'll quit my job and go to another job that gives me an extra $1,000. You ordinarily wouldn't do that. Like they wouldn't have done that 5 years ago. You'd say, okay, I need a gig, I need a side hustle. Screw that. I'll just go find a job that pays me more money. So I think there's a lot of wacky things going on, but the talent labor market has never been tighter. There are 2 jobs for every person unemployed, in the country. They're going to be layoffs, but they're going to be moving around people moving around left and right. And, I think the one thing I would probably say is the one thing that we've learned in the last 2 years is that nothing happens as slow as everyone thinks it does. Everything's happening at a much, much faster rate. Not long ago, is it a V? Is it a U? Is it a W? We're all talking about the market. What is it? And it turned out to be, a wacky shaped V, like it came back on fire. So I think, who knows how long this is going to be. I think the media love crisis. I think they play up on the crisis. What is it? A company lays off 100 people and it's as if it's the biggest deal ever in the world, as opposed to, 4.1 million people quitting 2 months ago. Really, it's kind of nuts. But the ability to find talent all around the world, right? Recruiting and finding talent is going to become a global thing. I want to find global people to work for my company that align with, my requirements. And then we're positioned to do that. When we work with Zoom, we're doing projects for Zoom in the US, in Singapore, and I think now over in Europe also. Who does that? Who, right. That's just not something that happens. So, again, look.
Hold on a second. Evan, can you hear me? You just froze up a little bit here.
Give it a second. There you go. Is that better?
Yeah, there we go. Okay, you're back.
Yeah. So look, the looming recession makes everyone a little nervous. I think it, scaled back some people from hiring, but one of the first people that get downsized are the talent acquisition people. which really works very well when you're an on-demand company. Right. Think about it. If you had cleaning crew, again, let's not relate, recruiters to cleaning crew. You had full-time cleaning staff and you have to have a reduction. Let's go eliminate the full-time cleaning staff and replace them with a contract cleaning team. Okay. Same thing in recruiting. If we don't, if we're worried about hiring and fire, by the way, we're talking to one company that has headcount plans for Q2 and Q3, and then none for Q4. So they're planning to use on-demand recruiters for Q2 and Q3. Like that just really flows really nicely into what we're doing.
Right. You're positioned well. And I will say this, I think that the stock, it looks to me like the stock is trying to put in or validate this as potentially being the bottom. I'm not saying it is the bottom. I want to be very clear, but I think that it is trying to stabilize here, and maybe it goes sideways for a little while. You do have some potential catalysts, and if there is an announcement of a potential acquisition, I guarantee you it's not going to be, or I can't guarantee you. I would suggest that it probably won't be at 98 cents a share.
That's right. That's right. Yeah. Right. It's almost laughable, but again, we're very appreciative of our shareholders that have been with us for a long time. We ourselves are shareholders, and we're committed to driving value for our clients, for our employees, and for our shareholders. And are going to continue to do so and have not lost the conviction to make that a reality.
Okay. Evan, I think unless you feel as though I have missed something, I think we've covered this story pretty well. I think if you don't understand it completely still, right above my head here is investor relations email alerts. You go to the website and you sign up for those email alerts, and you'll get every press release and every SEC release, if that's what you choose to receive. If you don't want to buy the stock today, that's fine. I am simply recommending, this is a pretty incredible story, a lot of enthusiasm here. Maybe put it on your watch list and just continue to follow the story and see if they execute, because so far that is what they have done. And I think they are positioned well, and I think it's going to get more and more interesting. The Oyster deal that was just announced, the things that you're talking about, the pre-packaging for startups, these are exciting things in my mind, right? So put the stock on your radar. Maybe, take a starter position. I don't think this is a terrible area to take a starter position and, start following the story and look to add as they execute. That's my view. Evan, what I'd like to do is have you back.
Sure.
Maybe in a couple of months, if anything significant happens, we'll have you back and kind of do a follow-up. But exciting. This is my time, right? When there's blood in the streets, fear in the streets, this is when you should be trying to find those stories that when things do turn, these have the potential to be explosive. And this one, I believe, fits that category. It's got a very tiny float. It would not take a real significant headline to send this thing, moving significantly higher, in my view, with not a tremendous amount of effort. Right?
I appreciate your conviction, Tim, and I share it with you. And I look forward to coming back and giving you updates along the way.
That's fantastic. Evan, thanks for taking the time. I'm going to go ahead and stop recording on this. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO interview here at Alpha Wolf Trading. Today we had Evan Sohn from Recruiter.com, ticker symbol RCRT. If you enjoyed today's interview, give us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.